All right, it's 5 o'clock p.m. in Singapore. Let's start the webinar now. Thank you for waiting and thank you for joining the Fastmarkets webinar, Navigating the Path to Decarbonization, Unlocking Insights with Fastmarkets 67.5 pellet indices. My name is Jane. I'm an index manager at Fastmarkets. I look after our index methodology. And I will be hosting the webinar today. The webinar will be recorded, so if you can't join or you have to drop off a bit earlier, don't worry about it. We will be sharing the webinar with you afterwards. If you have any questions during the webinar, please feel free to type your question and send in the Q&A box. You should be able to see your Q&A box on the top bar of your Zoom meeting. At the end of the webinar, I will also host a Q&A session to address questions from the audience. Let's get started. Let's first have a look at the agenda for today's webinar. First of all, I want to talk about why do we need an independent 67.5% Fe pellet indices. Why can't we just use other iron ore indices? For example, the 65% fines index or the 62% fines index. Why do we need an independent pricing for the high-grade pellet product? And the second part, I want to talk about what is an effective pricing mechanism and what we need to do to form this effective pricing mechanism for a healthy and fair valuation for high-grade pellet products, and what is Fastmarkets methodology for this index calculation. I will also share with you some key index liquidity statistics data for you to have a better understanding of how the index is calculated. And lastly, a Q&A session to address questions from the audience. Now, the first part. First of all, just a recap on Fastmarkets iron ore indices. Fastmarkets has about 22 prices for the iron ore market. We launched 2 new indices under our coverage for iron ore concentrate and pellet feed in February this year. They are both for the high-grade 67.5% pellet feed indices. So we launched these 2 daily indices for the high-grade pellet feed products. They are one of the premium index and one of the outright price. The 67.5 pellet feed premium index will be tracking the standalone premium component. Usually the pellet feed products are traded on top of a 65 fines index. The outright pellet feed index will be tracking the outright price of a pellet feed product, which means the basing index plus the pellet feed premium index with Fe adjustments for whatever the quality it is. In terms of the specifications of its index, the specs requirements are showing in the table below, where we have the Fe base to be 67.5%. The range for the Fe content for products can be used in the index calculation is ranging from 66% to 70%. The silica base will be 3%, and it will be up to a maximum of 6%. The alumina base will be 0.5% with maximum at 1.5%. For phosphorus base is 0.02%, maximum 0.06%. Sulfur at 0.03 and max at 0.1%. And the rest for titanium, moisture, and sizing. Other terms of the index will be as below. The trading quantity can be used in the index calculation to be a minimum of 10,000 tons. The price term will be CFR Qingdao. Other Chinese mainland seaports will be normalized to be CFR to reflect the price for CFR Qingdao port. The delivery window timing requirements will be for spot cargo that can be delivered within 8 weeks from the index calculation date. And the publication time is daily at 6:30 Singapore time. So now to understand why do we need an independent index price for the high-grade pellet feed product, we need to have a look at the pricing for concentrate products first. Because pellet feed are one of the subcategory of concentrate products who have finer sizing and especially be used in the pelletizing operation. Fastmarkets has had a long history for pricing concentrate products of more than 10 years. We launched a 66% Fe concentrate index in 2012. And over the years, there has always been a common misunderstanding that RMB 66% concentrate index will just equal to our 65 fines index, then plus 1% of the Fe value use adjustment. However, if you look at this graph showing the price history of the 65 fines index in the green line, the 66% concentrate index in the purple line, and their absolute differentials in the gray area, it is clear that the two indices correlate very strongly with each other. However, their differential is not constant and is certainly not always 1% of Fe value use higher than the 65%. And in fact, sometimes the 66% concentrate index is lower than the 65 fines index. You can tell on the graph that there are some of the gray areas which is in a negative, below $0 per ton, the differential. So why does the 66 concentrate index show such a different dynamic than what we usually would assumed it to show? We need to look at how concentrate product is priced in the spot market. Concentrate products are usually traded on a floating price basis using this kind of formula. It is usually using the average of RMB 65 fines index with Fe adjustment, of course, in a QP month, plus a fixed price premium or discount. This premium or discount on top of the 65 fines index is constantly changing because it is negotiated between the spot buyer and the spot seller per trade basis. This premium can go as high as $15 per ton, or it could be a discount as deep as $11 per ton. And these spot market concentrate prices data are used in the calculation of the 66% concentrate index by converting them into a fixed price equivalent. And this constantly changing premium or discount is the main reason why 66 concentrate index is not always 1% of Fe adjustment higher than the 65 fines index. Then why does the premium or discount fluctuate over time so much? It is mainly due to the differences in the way these two product types are predominantly consumed in the consumption route. High-grade fines, IOCJ, which is the benchmark underlying product for the calculation of RMB 65 fines index. However, RMB 66 index is only pricing for seaborne concentrates, including pellet feed products in the seaborne market. And IOCJ high-grade fines index is used as a sinter feed, and it is also considered as one of the most desirable brands in the market for optimizing productivity through the sintering consumption route. However, concentrates, especially those concentrates with finer sizing, are preferred to be used as a pellet feed in the pelletizing route to produce pellets. And therefore, the main driver for the 65 fines index is the specific demand and supply situation for the high-grade fines LCJ products. And the main driver for the 66 index, concentrate index, is the demand for concentrate products for pelletizing pellet feed products. The supply of the seaborne concentrates and pellet feed, as well as the competitive supply of China's domestic concentrate. If we look at the differential between 66% concentrate index over 65% fines index on a yearly basis, as the graph is showing on this page, it shows a seasonality factor. You can tell from the graph that usually during a winter season in China, which is during November to early March next year, 66% concentrate index tend to be higher than the 65% fines index. The differential is showing a premium higher than zero. This is because concentrates are usually traded on a premium to 65 index during this season. And usually during winter season, China would sometimes implement sintering restrictions for the environmental protection, which will lead to a higher demand for pelletizing concentrates, and therefore higher prices for the seaborne concentrates, especially for the pellet feed. However, during the summer season in China, synthesis demand would usually be stronger, and plus China's domestic concentrate production would usually be higher, so that the seaborne concentrate prices will usually be under pressure, and therefore 66 concentrate index is usually at a discount to the 65 fines index, where the differential graph on this page is under zero. Another reason is that usually during the summer season, when demand for pellet feed products is weaker, the 66% concentrate index is more like a reflection of concentrates who can also be used in the sintering route. However, their performance is generally inferior to the Brazilian high-grade fines LCJ products. Thus, their price could also be at a discount to the 65 fines index. Another additional factor we also need to note is that the overall iron ore price level. China's domestic concentrate producers, they are usually on the higher side of the supply cost curve. So they will tend to increase output when overall iron ore prices are high and reduce output when overall iron ore price is low. Thus, the concentrate differential over fines can also seem to have a counter-cyclical trend to the overall iron ore prices trend. And from the graph here, you can tell some of the years show a different story. For example, the red line here is showing the differential in 2022, where in January, in the first month, the differential was trending downward as usual as the seasonality. However, since February, the Russia-Ukrainian war took place, there was a panic in the market that for a shortage of Ukrainian concentrate going into the spot China market, so that the concentrate prices rose significantly to a historical high level. It also driven the differential between concentrate index and 65 index to a historical high. During 2016 and 2018, however, as the gray line and blue line showing, the overall iron ore prices were quite low at the time. Thus, that the concentrate output from domestic Chinese mines are usually under pressure, so that the concentrate premium for the seaborne concentrate is also supported by the lack of domestic supply. After we have a look at how concentrate products are priced in the market and how concentrate index will usually behave in a comparison from the 65 funds index, we're able to understand the pellet feed pricing and why we need to have an independent pellet feed indices. So Fastmarkets launched 67.5 pellet feed indices in February 2023. And again, there has always been a common misunderstanding whenever we speak with market participants that some people will just assume the 67.5% pellet feed index will just equal to MB65 funds index plus 2.5% of value in use FE adjustment. However, if we look at how pellet feed products are priced in the spot market, it is usually using such formula, trading on a floating price basis, using the average of MB65 funds index in a QP month with FE adjustment to the 67.5, and then again plus a pellet feed premium. So the overall pellet feed price is not only just the MB65 plus 2.5 of the FE adjustment. And this pellet feed premium component is also on a fixed price basis, and it is also always changing because it is negotiated between the spot buyer and the seller per spot trade basis. And similar to the concentrate pricing, this pellet feed premium is also like a thermometer of the pellet feed market dynamics. It is showing the unique supply and demand market dynamics for pellet feed products. This graph on this page is showing the MB65 funds index in the black line, the MB65 funds index plus 2.5% of FE value use adjustment in the light gray line, and the price for pellet feed products in the purple line, which equals to MB65 funds index plus 2.5% of FE value use adjustment, and then plus Fastmarkets 67.5 pellet feed premium index. You can tell that the differential between the purple line and the gray line is the size of the pellet feed premium, and it's also constantly changing over time because of the ever-changing supply and demand dynamics for pellet feed products. The graph on the right-hand side shows the index level for 67.5 pellet feed premium index since it was launched in February. The premium level has been on a falling trend over the last 2 months, from about $6 per ton to $3 per ton currently. So now I think it is clear that why do we need to look at this independent pellet feed premium index, because it is showing a distinguished supply and demand dynamics only for the pellet feed market, for the pellet feed product, different from anything else, different from the 65 funds index, which is only tracking the performance and supply demand dynamics for the Brazilian IOCJ product. And now moving on to the next part, I want to introduce you Fastmarkets methodology and how should we build an effective pricing mechanism for the pellet feed product. First of all, we need to understand what is an effective pricing mechanism and how does a product achieve fair valuation through an effective pricing mechanism. This triangle structure here is an example of an effective spot index linked pricing mechanism, commonly used for iron fines products. For example, a pellet feed product traded in the spot market using the price formula on MB65% index with FE adjustment for the QP month, plus a pellet feed premium at X dollars per ton. This transparent spot trade information will be then used in the index calculation for the 67.5 pellet feed premium index. And the premium index is calculated at X dollars per ton, assuming that this is the only data point. However, in reality, it is more complicated than that, but it is just a simple example. And then the term contract of the pellet feed product is settled on index basis using MB65 with FE adjustment, plus Fastmarkets 67.5 pellet feed index. By using the floating premium linked to the spot premium index, the pricing is able to reflect the latest supply and demand dynamics of the pellet feed product. And by trading this pellet feed product regularly in the spot market, it will be used as a function of price discovery. The product value can be fairly determined by its latest supply and demand fundamentals, and then this price will be represented in the spot premium index. Then the spot index will be linked under long-term contract settlement so that the product in the long-term settlement can always reflect the latest supply-demand fundamentals for this product. And it is clear for us to tell that from such an effective pricing mechanism, both Fastmarkets and the market participants are playing a very important role in forming a very healthy and effective pricing mechanism. Fastmarkets' primary responsibility is to ensure the index is calculated through a solid, objective, and consistent and transparent methodology to fairly reflect the value of product in the spot market. The market participants, on the other hand, will be helping to make sure there's always transparent and regular spot trades of the product to be used as price discovery function, so that through this cooperation, we can form an effective pricing mechanism for the pellet feed product. The next page, let me introduce you Fastmarkets index methodology for our iron ore indices. The flowchart on the right-hand side shows the process of our iron ore indices calculation. We start from data collection. We collect data through 3 different channels. For companies who have already signed data submitter agreements with us, they will submit their transaction data to us directly through back office email system, listing out all the details of the trade, including brand specs, pricing formula, quantity, price term, and all the information about the trade. We also collect data from trading platforms. The common trading platforms for iron ore market include Global Ore and Corex. Fastmarkets will observe the activities going on the platforms and then include the platform data into the calculation. Our editorial reporter team will collect data by doing market survey with market participants on a daily basis. All the data collected will be input into 3 different sub-indices, depending on who reports the data to us. If it's a producer report data to us, it will be entered into producer sub-index. Same for a trader and same for a consumer will be entered into a trader sub-index or a consumer sub-index. In each sub-index, we will normalize the prices to reflect the base quality of the index. This is because sometimes an index will include different types of products in the calculation, so that different type of product has different quality base, and the price will reflect their quality base only. And we will normalize their prices to reflect the base quality of the index. After all the prices are normalized, we will use tonnage weighted average calculation in each index. where transaction data will carry a full transaction tonnage. Non-transaction data, including bid, offer, and market participants' indication of tradable levels, they will be used at minimum tonnage, which is 10,000 tons. By assigning full tonnage for transaction data and minimum tonnage for non-transaction data, the tonnage weighted average will be more aligned with transaction data. So all of the three sub-indices will have their own tonnage weighted average calculation. We'll then take the straight average of the three sub-indices to get the preliminary index figure. Each of the sub-index will have the same weighting, 33% in the preliminary index figure, so that we ensure a fairness representation from each side of the market. Once we have the preliminary index figure, we will run an automatic outlier filter, removing any data points 4% away from the preliminary index figure. Once the outliers are automatically excluded, the model will rerun itself to get the final index. Our methodology, pricing methodology, and the calculation process is compliant with IOSCO's requirements for price reporting agencies. Data collected from market participants received from DSA companies and platforms, as well as the calculation process, will all be stored in the internal data system. Our reporters will submit the calculation and the final index for reviewing in the internal system. Before an index price is published, it will go through a peer review and a final approval process. That means it is always cross-checked by 3 different persons before it is published. Fastmarkets has also become an authorized PRA under the EU benchmark regulation in Finland since March 2021. And we run annual external audits for our key benchmark prices in line with IOSCO price reporting agency's principles each year. Moving on to the next page, I want to show some of the index liquidity data and statistics for us to have a better understanding of how the index is calculated and what type of brand the index level represents. The pie chart here is showing a data breakdown by different pellet feed brands used in the calculation of the 67.5 pellet feed premium index since the index was launched in February. Different pellet feed brands are used in the calculation of this index, and their origins include Sweden, Chile, Brazil, Peru, and Ukraine. As I mentioned earlier, when different brands are used in one index calculation, prices will be normalized to reflect the base quality of the index. And please do note that the percentage breakdown is not fixed as a rule. However, the percentage of breakdown can change over time, depending on the liquidity as well as the visibility of different pellet feed brands in the spot market. That means usually more liquid and more transparent a pellet feed brand is in the spot market, the more data points it would be used in the calculation of the index. The rule for data inclusion for different pellet feed brands is that pellet feed products whose quality specifications are within the requirement of the index can be used in the calculation of the index. In the future, for example, if there is a new pellet feed brand started operation and started to get trading in the spot market, as long as its quality is within the index requirement, it can also be used in the calculation of the index, and same, always normalized to reflect the base quality of the index. The next page, let's look at some of the statistics for data points and some comparison between the 67.5 pellet feed index with other key benchmark indices. The first graph is showing the average number of data points used in the calculation each pricing session. The first bar, Fastmarkets 62% low alumina index, on average has 15 data points per pricing session, same as Fastmarkets 65% fines index. 67.5 pellet feed index on average has 22 data points each pricing session. The second graph here is showing the number of spot trades used in the index calculation during the last month. 4 spot trades used in 62% low alumina index calculation. 7 spot trades are used in the 65% index calculation, and 3 spot trades are used in the 67.5 index calculation. The last graph is showing the number of bids and offers used in the calculation of these indices during the last month, where 3 bid and offers used in the 62 low alumina index, 8 bid and offers used in the 65 index, and 10 bid and offers are used in the 67.5 pellet feed premium calculation. We can tell that the number of spot trades for the 67.5 pellet feed index is not as good as other key benchmark indices at this stage, which is considered fair considering the pellet feed market is smaller in scale and the pricing mechanism is less mature than the 65 fines index, which is the high-grade Brazilian IOCJ fines, as well as the 62 low alumina fines, which is the Brazilian blended BRBF fines, which both products are regularly traded on physical trading platforms, Global Ore and Corex, in a very transparent way. However, in terms of total data points and bid and offer number of bid offer data points liquidity, the pellet feed index is definitely showing a great start. The spot market for pellet feed products will take its time to develop further, and Fastmarkets is ready to support its pricing mechanism to develop further and to witness its growth. Next, last but not least, we can tell that a healthy and effective pricing mechanism will always need both Fastmarkets and the market participants to support its robust functioning. Fastmarkets is providing spot indices that fairly represent product value through a solid and objective, transparent index methodology. And we strongly encourage market participants to support the effective price discovery through regularly trading the product in the spot market in a transparent way, as well as your participation in the data submission will both help in the index pricing to develop further and for the pellet feed product pricing to be more healthy and effective. And together will help to build a healthy, effective, and fair valuation for the pellet feed product. That's all of the introduction from me, and I'm very happy to address some questions from audience regarding to the pellet feed pricing or our new 67.5 pellet feed indices. Please feel free to type and send your questions through the Q&A box on the top bar of the Zoom meeting. And if you have any follow-up question after the session, or you would like to participate in data submission, or just want to keep in touch with us to keep a regular discussion of the pellet feed pricing, please feel free to drop me an email at jane.fan@fastmarkets.com. And again, as I mentioned, we are happy to sign a data submitter agreement with companies, which we will only use the data you submitted in the index calculation. However, we will keep the information and who is behind the trade confidential, so that you don't have to worry about disclosing names or anything related to the data. And I'll give you a few seconds for audience to type in the questions. Meantime, I also want to highlight that we have a white paper published in 2021, which have a very detailed illustration on the pricing mechanism for the high-grade iron market, including high-grade fines, direct charge materials, concentrates, pellets in details, including how their pricing formulas have evolved over time and what were the drivers for their differential. Feel free to download it, have a look if you like. I can see that there has been some questions in the Q&A. Let me just go through it one by one. First question here is why ministerial BSPF is not used in the calculation of the index. Thank you for the question. I think the reason is that this index is a spot index. So meaning that only spot trade or spot data points will be collected and included in the calculation. So the spot market now and the spot price term is at a CFR China price term. So that means only if a product is traded on CFR China, CFR Qingdao term in the spot market, then the data can be included in the calculation of the index. And I believe at this stage, if I'm correct, ministerial BSPF is still mostly traded in the long-term contract with a fixed premium negotiated every term. So that is the main reason it doesn't appear in the data breakdown. I hope that answered the question. And I'll move on to the next question. How do you intend to trade magnetite and associated energy benefit premium? It's a good question. Thank you. On this question, it also commonly occurred when Fastmarkets did the market consultation on launching the index, because the magnetite and hematite, different type of pellet feed, it definitely has a difference, and this difference will be reflected in the price. So how do we address these differences? So for now, we only have one 67.5 pellet feed premium index, and it can include both magnetite and hematite. The reason we didn't split into two is only for the sake of liquidity at this stage, because pellet feed market is a very niche market, it's small in scale and very immature at this stage. If we split into two, the liquidity will even be worse than now. So we only use one index, which both include magnetite and hematite. And you can tell from the data breakdown that for now at this stage, the most of the brands used in the calculation, like the Peruvian, the Chilean, and the Swedish pellet feed, are mainly magnetite. So that means at the stage, the 67.5 index is mainly reflecting a magnetite pellet feed. In the future, if there's more production coming online, like the CSN hematite pellet feed, or if ministerial pellet feed could be traded in the spot market, we'll observe the changes very closely. If it could form another price discovery point, which differ significantly from the magnetite pellet feed, it would work to separate the indices for hematite differential or magnetite differential. But at this stage, like I mentioned, for the sake of liquidity, it's combined into one index. and the most liquid one in the spot market are mainly magnetite. The next question, what are the origins of the 67.5 pellets? I think if you're asking for 67.5 pellet feet, let me go back to the data breakdown page. The data used in the calculation of the pellet feet index is showing here the origins, including these countries listed here. Please feel free to have a look. The slides will also be shared afterwards. Let me move on to the next question. The next question is, do you take into account any normalized trades that are linked to the 62% Fe index? Yes, we will take into account, but let me explain how it will be taken into account. So as I mentioned earlier, in our methodology, we will include trade data, bid offer data, and market participants indication of tradable level, which is basically market participants assessment for the premium level. If a pellet feed is traded on 65 fines index with a pellet feed premium, for example, at $4 per ton, the $4 per ton will be used directly as a trade data point into the pellet feed premium index calculation. However, if a pellet feed is traded on a 62% index with a premium, for example, $20 per ton, because it is not directly as a pricing formula using 65 as a pellet premium, but we are able to ask for the market participants to give us a derived premium on top, as if it was on top of 65% fines, depending on what is the current differential between the 65 fines and the 62 fines index. For example, if the differential is at $16 per ton, then the derived premium, if the pellet feed product was traded on top of 65, will be 20 minus 16, which is $4 per ton. But because it is not directly on 65, this $4 per ton is a derived premium will only be entered in the calculation as a indication data point, where its tonnage will be at a minimum tonnage in the tonnage weighting average calculation. I hope that answered the question. Moving on to the next question, what is the size of the data covered for the index and how many tons for a pricing session? Let me go back to the data statistics page here. So to answer your question, first graph is showing the size of the data. So for the calculation of 67.5 pellet feed premium index, usually there's 22 data points in pricing session. And how many tons, this will depend on day-by-day situation because we use a tonnage weighted average calculation. So it depends on what is the data type for each data point. If it's a trade data, like a spot trade deal data, the full transaction tonnage will be used in the calculation. If it is a non-transaction data, including bid offer, indication of tradable level, the minimum tonnage will be used in the tonnage weighted average calculation. So there is no fixed number depending on how each pricing session differ from each other. But feel free to drop me an email. I could share more of the tonnage statistics with you afterwards. Next question, when do you start to release price forecast for 67.5 and 67.5 premium? I don't have a firm answer now, to be honest, because the forecasting is handled separately from our team, because I'm the spot pricing team. It's handled by our research and consulting team. I know that they are already looking at this, and I will check again. Please just drop me an email so that I can get back to you afterwards. I'll check with our research and consulting colleagues when will they be releasing the price forecast. Moving on to the next question, is there any difference in premium or pricing between magnetite and hematite? I believe I've answered the question earlier already. Just summarizing one sentence, yes, there is pricing and premium difference, but at the stage, liquidity is not built up as very good yet. So we didn't split the index into a magnetite and hematite. We combined them into one index for the sake of liquidity. The index currently is more reflected of a magnetite. In the future, if liquidity builds up, we are very happy to develop a hematite pellet feed price or simply a differential. Please drop me an email. We can keep in touch on this one. The next question is there any demand for even higher grades like 70%? It's a good question. I do think there is demand, and I do remember that some of the international trading firms, they are actually currently handling a product for pellet feed at Fe content at 70%. So I think there is definitely demand for it. However, we haven't seen such products trade in spot market yet. For example, we haven't seen 70% pellet feed trading spot market and used in the index calculation at this stage yet. But I do believe there are activities going on as a long-term basis at this stage. Moving on to the next question. Are both DR and BF pellet feeds included in the one index, and if so, is there a difference between the two in terms of premium? Yes, this index, in terms of the index and the data collection, theoretically, yes, both DR pellet feed and BF pellet feed can be included in the index calculation. But at this stage now, we don't really see DR pellet feed has a good spot market liquidity yet. Most of them are still locked under long-term contracts. So therefore, there is not yet a clear tracking of the differential in terms of the premium between the two. But this is definitely what the market wants in the future and what we want to help here. So we launched this pellet feed index and hoping to start tracking the pellet feed premium in the future. If DR pellet feed start to trading for market, has more visibility and transparency, we're able to track the differential. Either it's normalized in one index, or we're able to show the differential on top of this pellet feed index. Both ways will work, and we'll have to find out in the future. Moving on to the next question. Any plans for listed future on this index? We would love to, but yeah, it has to wait for a quite some time, because I think for index to be successfully capturing the product value and then used in the long-term contract, customers will definitely have this natural need to hedge the risk if they are exposed to index-linked pricing mechanism. And then it would make sense for us to have a futures contract. For example, the long premium futures contract. We could have a pellet feed premium futures contract that customers can hedge their exposure to the pellet feed premium. And in fact, I do hear feedback from the market that some buyers for pellet would also love to use pellet feed premium as a proxy for the pellet premium settlement, and then they would have this need to hedge their pellet premium exposure that is also linked to the pellet feed premium. So yes, in the future, if the demand develops, it's definitely one area we need to look at. Moving on to the next question. Any plans for, sorry, this is the same. Sorry, I lost it. Give me a second. Sorry, the next question is normalizing for the magnetized pellet feed. Is it the same as the quality normalization? Yes, it's basically the same. We still use the same normalization mechanism where we will run a regression analysis on all the data we collected to find out how does each factor affect the price, and then we will use the coefficients for different brands. So it's same as the quality normalization process. The next question is, how do you secure the 67.5 representability since you don't understand which supplier are using the index? Yeah, it is a good question. I think it's a question of a chicken and an egg. So usually, for example, the indices that are now commonly used by producers and buyers in the contract, for example, MB65 and MB low alumina index, it doesn't get used from the day one when the index is launched. Usually how it works is very similar to how the iron overall pricing mechanism evolved over the year. Before 2008, buyers and sellers will negotiate a yearly benchmark, so a yearly price, fixed price, for example, $80 per ton or $90 per ton for the whole year procurement the next year. This is negotiated before the start of the year, depending on how each other's expectation for the next year. But then during 2008, where the spot prices is so different from the long-term contract, the fixed price negotiated before the year does not reflect the latest supply demand of the market, so that the buyers and the sellers will have this incentive to link their price into the spot index, which will be able to capture the latest supply and demand dynamics for the product. And the similar story will be happening in the pellet feed market as well. In the beginning, the products are all traded off the table, secured in term contracts, long-term contracts, where a few of the spot volume is represented in the spot index. And then over time, suppliers and buyers would feel like instead of negotiating a fixed price every quarter or every year, which the situation will change after a few weeks, they will link to the spot index, which has been capturing the ever-changing dynamic to reflect the product type. So this will happen over time. So it is not you don't expect it to just link everything to the index very soon after the index is launched. My understanding that the whole market participants has also have to adapt to this pricing mechanism, take their time to make sure their product is traded in the spot market regularly, and then index reflecting the price level. So it takes time, and it definitely needs the support from both buyers and sellers to use the index and make sure the product is traded in the spot market and then reflected index. So yeah, it's a question that has to be answered over time, as well as it needs support from the whole market participants. I hope that answered the question. I'll move on to the next question. The next question is, will non-CFR China trades be used in the future? This is a very good question. We do consider this, and over the time, we hear so many feedback from people that in the future, other markets, for example, Middle East could become a more represented spot market once the capacity and demand started to build up. And if, for example, the CFR Middle East or even FOB market develop its spot market, develop its spot activity, and we are able to collect spot price data points to calculate a price, we definitely are happy to do so. Either we include in the CFR China in the CFR China index, combine the liquidity into one index, or we launch two different separate indexes, one CFR Qingdao and one CFR Middle East, for example, to reflect the different spot markets. We are definitely happy to do so if the liquidity starts to pick up. Now, moving on to the next question. The next question is, what's the reason for spot trades on 67.5 being lower than 65, while data points and bid offers are higher? The reason, I think the answer is that the number of bid offers are showing what are the number of bid offers in the total month. So during March, the total month, so that if a product couldn't get trade for a few days, and the buyer and the seller is still bidding or still offering, then we hear an update bid or an updated offer in the next day or in the several days following days, so that in each of the pricing sessions, you will have a bid data point and an offer data point. So if the product couldn't get trade for a while, then the buyer or seller keep updating their offer level, bid level, it will always appear in the calculation. Then it finally gets trade. So that is why number of data points for bid offers are higher. Moving on to the next question. Next question is, what is the pellet outlook? The pellet outlook, if it's in terms of forecasting for pellet premium or anything, I'm so sorry that I couldn't address the forecasting or outlook, short-term forecasting price in the session, because I'm from the spot pricing team. It would be a conflict of interest. But I think, as you can tell from the graph, the pellet fee premium has been falling over the past 2 months, same as the pellet premium. It was BS pellet premium was at 45 last quarter, and the new quarter is at $41 per ton. So it's also on a downward trend. However, in terms of the outlook or forecast, please drop me an email. I'm very happy to share with you our research report, link you up with our research analyst. Moving on to the next question. Is size 0.15 mm common for PF? We would expect a smaller PF to be more common. If size is around this, it needs a regrinding and should be discounted. Yeah, this is a good question. On the sizing requirement, I understand that we set it a little bit wide, a little bit not too restrict, also for the same reason. It is a less mature and very new small scale niche market. In the beginning, we want to keep the basket more wide to include more liquidity in the calculation. So yeah, that's the reason we set at 0.15. In the future, if there is a requirement to narrow down the sizing factor, we're happy to make amendments to the specs. We run a methodology and specs review every year on ad hoc basis. So do let us know if you would suggest another, like a stricter requirement or narrowing range. Moving on to the next question. Yeah, the next question is, for now, which supplier or product is using the index? I think this is a question I will not address in the meeting because it is still a new index. I'm happy to discuss offline on it. As I mentioned, we need support from the market, from buyer and seller to trade on the index to make this index more reflective of the level. Next question is views on the future liquidity development of spot pellet fee trades to support this index. I think the future is looking promising, especially we do have, for example, in the market, we know that more producers, more mines are looking at either expand their concentrate production to have some more higher grade pellet feed, or going to launch their pellet feed production output soon. In this decade, I would say, like in the next 2 to 5 or even 10 years time. So it is a market that will still grow. So I do hope in the future there will be more liquidity, especially there will be more spot pellet feed to support the index. I think it is showing a promising outlook. Another question is, any spot trades using the index already? Again, I'm sorry, I won't address this question directly in the webinar. Happy to discuss afterwards. Another question is, how does MD 67.5 index compare with the MD 66 index? What is the differential? I don't have any graph showing in my slides ready now, but I'm very happy to show you the differential and show you the graph afterwards, to send you some graphs and data for a closer look. Please send me an email afterwards. All right, I think I've answered most of the questions, and we're running over time a little bit, 5 minutes. Again, I want to thank you everyone so much for joining the session and send me all the questions. Please let me know if you have any follow-up questions or the questions I didn't address in the session. Send me an email and keep in touch. We will share the recording, share the PowerPoint slides with you afterwards the session as well. All right, thank you very much for joining. I wish everyone has a nice day or nice evening ahead.